Hello. Right. Nice to meet you guys in this Tuesday morning, and I hope you guys enjoy the weekend in the last week. And also I want to wish all of our Malaysian here happy Malaysian Day last week. All right. So today I'm going to talk about some I'm going to share some insight about the Malaysia. And one our topic here is time to regain focus. So again, just a quick introduction. My name is Kevin Kao. I'm from FSM1 Malaysia research team, and here we go for our presentation today, which we're gonna focus on Malaysia. So first and foremost, this is just a disclaimer because my compliance asked me to do so. And yeah, this is the material and the content here is just it's not an investment advice. And any investment advice if you're seeking for any investment advice, please seek for the respective advisor. So today, I'm going to focus on three topics. The first one, the macro factors of Malaysia. Basically, in the macro factors, I'll be sharing some stuff about the GDP, inflation, some of our thoughts for the upcoming fiscal and also the monetary policy. Next, I believe that a lot of you are still wondering how's the movement for the ringgit. The ringgit has been is being weakening against the US dollar, and as of today, it's trading about 4.6, about around there. And maybe you guys will wonder when is the peak for our ringgit. So next, definitely when it comes to the fiscal economy, one thing that we need to note it with is the Madani economy, the new economic landscape. So yep, let us first and foremost move to the macro factors of Malaysia. This is just a quick market review. Then you can see from the red color line, which is showing FBN and also the yellow color and also the gray color line representing the FBM 70 and also the FBM small cap, which gives you some insight of what's the smaller and mid cap players. You can see from the chart on the left hand side, the red color chart is showing a downtrend from December to June, and subsequently it rebounded in July. And also, the smaller cap players have a similar trend, but overall you can see that the smaller to mid cap players, they are having a positive performance. Why is this happening? Because ultimately, if you look at the red color line, what is the players? Well, who are the players that are gonna have those now heavy weightage in the Malaysian market? You can see that telecommunication, plantation, financials, healthcare, they are all facing they all suffer from the pullback of the capital flow this year. Why? Because ultimately you can see that last year when the global economy are still facing this kind of a gloomy sentiment, investors they are seeking for something that can provide them shelter, which is the value-oriented counters. As you can see, our FBNKLCI, and also if you look at some of our ASEAN players, we are very tilts towards the traditional value counters. We are very heavy on the financials. We are very heavy on consumer. So that's why ASEAN being a bright spot, and also in Malaysia. However, coming to this year, interestingly, when the investors, when this kind of macro uncertainties has been subsided, the investors are seeking for more growth-oriented counters globally. So that's why the capital flow move from the value-oriented counters to the, you can see from some of the technology related counters like Nasdaq, Korea, Europe, these kind of developed market counters. And also you can find it very interestingly, you can see that the top three top performance, utilities, property, and also construction, they are all generating a positive performance year to date, because ultimately, especially after a lot of our political instabilities has subsided, investors are starting to gain confidence, and they are starting to speculate the potential revival of all these mega infrastructure projects. So this will be the first slide that I want to bring up the message where the investors are refocusing into Malaysia. Well, I want to bring your attention to the chart on the right-hand side. What you can see from the chart, you can see that the foreign net inflow is showing a negative trend from September 2022 until about June 2023. So why has this happened? Because ultimately, the investors, if you look at the global bourses, you can see that investors they are chasing for a better performance in terms of these kind of growth-oriented counters. That's why our FBN KLCI has been hindered because of what I mentioned just now, the traditional value counters. So throughout the years, from September to June 2023, the local institute players, they are the one who's supporting our market. So coming back to July, we can see that July, the foreign net inflow has started to come back. Even if you note that July, we are still facing a six-state election. I mean, if you look at the newspaper, you look at the media, they will try to argue that, oh, our political instabilities are still there. But you can find it very interestingly because the foreign inflow is coming back. There are two reasons of this, because one reason of that, July is a very good month for China and also for US. From US side, the investors are betting on the terminal rate of the Fed rate. While the China, we can see that some of the recovery, although I will argue it's a choppy recovery, especially in July. So that's why the foreign investors are starting to gain confidence and they are seeking for Malaysia. That's why they come back in July. And also, interestingly, in August, we can see that the local institute player and also the foreign players, they are still having a positive inflow year to date. And coming forward, if you ask me, what is our anticipation? We think that with the subsided political uncertainties and also the investor sentiment to turn positive globally in 2024 onwards, we expect this will be a tailwind for Malaysia's business to return to the past glory. And one thing I want to show you quite interesting here, if you look at the dark blue color chart, the dark blue color bar chart, you can see that throughout the years, throughout the months, the local retail players, they are still showing a net outflow, meaning that, usually retail players, they will be a laggards compared to the insti and also the foreign players. So that's why we think that investors, if they want to accumulate upon the weaknesses, we think that now is a very, very good opportunity for you as investors to accumulate upon the weaknesses. Next, I want to illustrate what is our GDP growth. So if you look at the chart on the right-hand side, you can see that the gray color line, which representing the private consumption, has the biggest component in our GDP growth. Next, our gross fixed capital, meaning that all those investment related product, investment related growth are the first runner-up of our GDP weightage. So if you ask me what is our expectation for the GDP growth moving onwards, straight to the conclusion, we're expecting a positive, albeit a slower economic growth into the third quarter or the fourth quarter, hovering around about 3% to 4% year over year on the back of a resilient domestic consumption to offset the sluggish external trade activity recovery. If you look at our private consumption growth, you're going to find it, our Malaysia private consumption growth, exclude the COVID-19 time, we are experiencing a relatively healthy growth, about 6%, about 4% to 8% year over year. So in this year, maybe it will be slightly slower because of ultimately, micro uncertainties and also some of the anticipation that the government will have this kind of removal of the subsidies or even a subsidies reformation. So that's why we think that domestic consumption will have some pressure, but it will still be a positive growth. Next, we think that investment growth might be the catalyst under the Madani economy, as the momentum could gain pace should the government accelerate the implementation of the development projects have been suspended earlier. When our government, our new government, our PHBN and also GPS led government, when they step up, they did a lot of review for the projects. That's why investors, they are worried about, will these kind of projects be suspended? But coming September, especially mid of September, we are seeing more clarification from the government that yes, these projects are under review, but doesn't mean that it will be suspended. So that's why investors are starting to gain confidence, and we think that in terms of when the government, they want to put in some effort in this kind of infrastructure project, this will definitely boost the investment growth. And also, if you look at the net export, trade balance, we think that should the global demand recovery take effect in 2024 or 2025, it could be an upside surprise for us to boost economic growth. If you look at some of our largest trade partners like China, they are still having a choppy recovery. So if China has they experience a strong rebound or even a gradual rebound, it will be the positive wildcard for us to boost our export growth. So next, I want to bring your attention to the inflation. If you look at our inflation data, you're going to find it very interestingly, although, the developed market, they are facing a soaring inflation. But coming to our local side, you can see that our inflation trend generally is showing a downtrend. Why? Because our government is very generous when it comes to subsidies. Our RON 95 is being subsidized. They provide a lot of subsidies to our RON 95, like even our electricity bill and even diesel. But from what the government has cited, or I would say that the government tones in a couple of months ago, we can sense that the government has this kind of intention to remove subsidies or even reform the subsidies from either from previously what we have experienced, the blanket subsidies mechanism, to a more targeted subsidies mechanism to focus more on the lower income group, low to mid income group. So what I want to bring a message here is, if you look at the chart on the right hand side, you can see that one of the key components to drag down our inflation is the transport and also food. Generally, the food is showing a downtrend, while the transportation, which there are some of the components are diesel, fuel, there is even showing a 0% year-over-year growth. So if the government really take action, especially on this kind of subsidies removal, it will more or less tilt our inflation rates towards the upside. So when it comes to inflation, when we say about inflation rate will tilt towards the upside risk, what is the implication? Next, we're going to look at the Bank Negara Malaysia monetary policy. Straight to the point, where we expect the Bank Negara Malaysia to extend the pause on the cooling CPI until the remainder. In the remainder of 2023, we only have one meeting left, which is which will be held on November. So we expect the Bank Negara Malaysia to hold the OPR at 3% for the remainder of 2023. However, if the inflation risk because of removal of subsidies, or even some of the unexpected tax like GST, capital gain tax, or even the revival of some of the like Cukai Makmur, this kind of one-off taxes, the risk for the inflation will tilt towards upside. And generally, what I want to bring on the message here is, you can see that the inflation is stabilizing, while the growth should slow markedly in second half of 2023, because like what I mentioned just now, some of our largest trading partners like China, US, EU, their recovery is not as good as everyone is expecting. So the chart on the right-hand side is showing you the OPR, the MGS 10-year yield versus the inflation year-over-year. I want to bring your attention to the dark color line, which is representing the inflation, and also the light blue color line, which is representing the OPR. You can see that from September to about June 2023, our inflation is higher than our OPR, meaning that our real interest rate actually is showing a negative trend. But coming into July, we can see that our OPR rate is already higher than the inflation rate. So that's why we think that the Bank Negara Malaysia, they are comfortable with what we are experiencing just now, what we are experiencing now, and also 3% is likely to hover at this level, because ultimately, from the Bank Negara Malaysia perspective, they want to strike a balance between healthy economic growth and also the price pressure. So throughout the past 1 year, the Bank Negara, one of the key priorities for Bank Negara Malaysia is to control the inflation. And now we can see that the inflation has, I would say that it's being controlled. So next, the Bank Negara Malaysia would like to focus on the economic growth. So that's why we come to the conclusion that we expect the Bank Negara Malaysia to hold our OPR at 3%. So when it comes to the next part, and I want to bring attention to the earnings. If you look at the FBM KLCI earnings and also the FBM EMAS, which representing the FBM, the top 100 companies in the in Malaysia, you can see that our earnings growth is showing you a negative trend, no matter it's from KLCI or also FBM EMAS. But interestingly, in the next 2 years, the market is expecting I would say a relatively strong growth in FBM KLCI and also FBM EMAS by about 14% growth and also 8.3% respectively in these 2 years. So why has this happened? Because I will just start from the FBM KLCI first. I believe that expected influx from the foreign tourist arrival and also the resilient domestic household spending, like what I mentioned just now, could be a tailwind for consumer sector to ride on the tide. Like if you look at our foreign tourist arrival, we can see that actually we are still far away from the pre-COVID level. But coming to 2023, when you can see a slight recovery in the worldwide, and also with the weakening ringgit Malaysia, we think that it will be the tailwind to attract the foreign tourists come to spending in Malaysia. And also the financial sector, those banks could be aided by the rising loan growth from both infrastructure and also property projects under the Madani economy framework. So financial sector banks, generally, they are very positive correlated to the economic growth. So if we are anticipating our Malaysia economic growth to continue to be positive, it will be a tailwind for our financial sector to maintain resilience. Also, on the other hand, the positive catalyst would be if the government they implement this kind of this infrastructure project. It will be a positive catalyst to construction and also the property. So next, it will encourage people to spend, and subsequently it will it will increase the total assets for the banks. And also some of the negative news, like what we have witnessed already in the plantation sector and also telecommunications sector, because of partially because of a high base effect last year. We still believe that the steady earnings growth in the financial and also the consumer sectors could partially offset the negative earnings impact in 2023. So that's why I come to the conclusion that we think probably it's a time for investors to regain focus in this underappreciated market for years. This chart I want to show you here is the valuation. How to read this chart? Basically, you can see that if the line is trading somewhere around expensive, which is +1 standard deviation, it means that probably the market is trading at an expensive valuation. And if the market is trading around the cheap level, which is representing a -1 standard deviation, meaning that investors could purchase the market. Purchase the purchase at a relatively cheap price with a cheap valuation. So you can see from KLCI and also ERMAS, our Malaysia versus is trading around a cheap level, meaning that if investors they want to accumulate upon weakness, we think it's now. And last but not the least, as the political narrative shift, we see some potential bolstering of investors' confidence could play a pivotal role in driving economic momentum and also attracting a further investment into the nation's market. So next, what is investment thinking? They want a relatively stable. They want certainties instead of uncertainties. So we can see that our monetary policy, like what I have analyzed for you just now, we think that the Bank Negara Malaysia is likely to maintain their monetary policy, and also from a fiscal stance, from what we have witnessed in the Malaysian economy framework, including NIMP, NETR, and also even in a 12 Malaysia Plan midterm review, we can see that the government has a strong intention to boost, especially in this kind of construction, infrastructure-related sectors, and also the government will focus more on the HGHB, which is a high growth, high value sector. So these are all a clearer direction from the investor's perspective, and with this kind of clearer, more with this kind of better clarification, we see that investors probably start to take a look on this market. So from the unit trust perspective, if you want to purchase in Malaysian market, we think that these two funds, which is a core income fund and also a principal Islamic small cap opportunities fund that practicing a bottom-up strategy in domestic bourses, could be a viable option for you. So why we pick these two funds instead of the large cap, those funds that tilt towards large cap, because we think that at least at this juncture, right, if you look at the KLCI, it is more very value oriented play. So if investors they want to buy in we think that the growth sector will be a bright spot in the next couple of years, because the government has this strong intention to inject some catalyst into these few sectors. So that's why we think that investors should take a more bottom-up approach, and these two funds might be a good option for them. So after all these, the macro factors, next I want to tell you something about the ringgit, where straight to the point, we think that the ringgit might be oversold. So first and foremost, just a quick market review of what happening to ringgit. If you don't understand, no worries. So year-to-date wise, we can see that the ringgit, if you look at the chart on the right-hand side, basically how you study this chart is you can see that the ringgit, to compare against a basket of major Asian currencies, ringgit is the lowest. It depreciate quite a lot, I would say, compared to our ASEAN peers. You can see from the Thai baht, Philippine peso, Singapore dollar, or even like Indonesian rupiah. And interestingly, ringgit it only strengthened, it only stronger compared to the Japanese yen and also the Chinese renminbi, where both central banks year-to-date wise, they are still having a relatively dovish stance. So why is this happening? Because ultimately, when like what I mentioned just now, some of our largest trading partner, like China, with a slow recovery of the China from the extended self-isolation during the pandemic, and also year-to-date wise, everyone is expecting the six-state election, because I know this kind of domestic political instability has exacerbated the situation and weighed on the ringgit Malaysia. And also, if you look at the USD side, we can see that because of a steep rate hike in US, USD has strengthened against a basket of currencies worldwide. So yeah, as you can see, the ringgit Malaysia is trading about 4.6 something against US dollar. Is I would say is probably near to is the all time low already. And fortunately, why we say that ringgit could potentially rebound against US dollar, I mean, I would say that appreciate against US dollar because ultimately there are signs of a softening US inflation metrics in the recent month. So I just think that probably from at least from a Fed perspective, we are already near to the terminal rate. Next, I want to bring attention to why we are thinking that the Fed is already closing at a terminal rate. So coming to the second half of 2023, we expect the story's narrative has changed. In the first half of 2023, the Fed, they are still targeting to control the inflation. So that's why we still witness a lot of some of the aggressive rate hike out there. But coming to the second half of 2023, with US inflation starting to be stabilizing, we believe that the Fed likely to take a more data-driven approach, and they will be more prudent when it comes to the monetary policy moving onwards. So that's why we think that the current level is probably is really near, is trading around this terminal rate. When we state about when we have this kind of assumption where the US is trading around when the US Fed rate is near to the terminal rate, we need to look at the US 10-year Treasury yield movement before and after the 90 days after the last rate hike announcement. How do you study this kind of last rate hike announcement? We have we take the past 4 rate hike cycle, and you can see that in the past 4 rate hike cycle, right? Generally, after the last rate hike announcement, after the 90 days of the last rate hike announcement, US Treasury yield is showing a downtrend. So the story I want to bring you here, I want to tell you here is, so usually when US Treasury yield is known as a risk-free rate. So that's why when the investors they could generate about a relatively higher return in the treasury, why they want to still take the risk to invest in emerging market. So generally, when the US Treasury yield is trading at a high level, it will weigh on the emerging market performance. However, if taking the assumption that the US Treasury yield will be showing a downtrend after the last rate cut announcement, if we're anticipating the US Fed rate is trading at its terminal rate, we can we are hoping that the investors will start to switch their focus, switch their attention to the emerging market, with Malaysia being one of it. Next, you can see that from the right-hand side, the Fed rate versus the dollar index. Okay, so if you follow a textbook, I mean, theoretically, the higher the rate, the higher the currency will be. But interestingly, the market is always looking forward. So that's why when the Fed rate is trading at 3.25%, the dollar index is trading at its highest point, about 114.5, meaning that the investors are already expecting the Fed rate to reach some point of level there. And subsequently, when the Fed rate is trading at is located at 5.5%, the dollar index is showing a downtrend. So the story I want to tell you here is we believe that the dollar index, even if the Fed they still announce on the rate hike, we are unlikely to witness as aggressive as the last 1 year, 75 basis point, 50 basis point, this kind of a very aggressive tightening. So next, coming to the second part with the tactical allocation, we see the Malaysia export-oriented nature to benefit with the elevated commodity prices. If you look at the chart on the right-hand side, you can see that some of the heavy weightage in Malaysia, Malaysia being an exporters, we export a lot of like petroleum, LNG, and also the palm oil. It comprised about 22% of our total export. So when we want to examine the ringgit, right, definitely we need to look at the export product. So from the CPO perspective, we see the looming El Nino fear, this unfavorable weather to wait on the supply, and also the Russia's exit from the Black Sea Grain Agreement has resulted a spike in the CPO price, and we believe that the CPO price will likely to hold at current level. The commodity prices will continue to be higher for longer, and also the OPEC Plus, it will continue to initiative to cut the production in order to maintain the oil price at a favorable level. So combining the factors like what I mentioned just now, where we think that both CPO and also the crude oil prices will remain high in the remainder of 2023, it's gonna support our positive view on the Malaysian ringgit in the second half or even the first half of 2024 to appreciate against the US dollar. So being one of the largest producers and also exporters of these two commodities, it could lead to an increase in export earnings, positively impacting the Malaysia ringgit exchange rate. And also, don't forget that if you look at our KLCI, we got a lot of big boys there that are categorized under the plantation and also the oil and gas sector. They will benefit from that if the investors starting to look at these counters, and it will lead to a potential investment inflows into the capital market, subsequently strengthen our ringgit Malaysia. So the next one, we see that the government focus into the economic growth while maintaining a social welfare after more political certainties. Before the state election, because what I mentioned is like investors, they dislike uncertainties. So if you look at the USD MYR trend 90 days before and after the general election, and it's include a Sheraton Booth 2020 because it is one of the major political events. You're gonna see that after some of the events, political events that give us more certainties, the ringgit Malaysia will showing an uptrend, meaning that ringgit Malaysia will strengthen against the US dollar. And if after the general election or after some unfavorable event, if we have this kind of political uncertainties, US dollar, ringgit Malaysia will depreciate against the US dollar. So it's generally the trend. So what happened for now is, especially after the state election, we will at least have 4 years of better political stability. So that's why we think that is good for the government to continue switch our focus from this kind of political war to economic growth and also maintaining a social welfare. So another interesting chart I want to show you here from the right hand side. If you still recall at the start of the presentation, I did show you the equity earnings, the equity capital inflow. And also this is showing you the Malaysia foreign net bond inflow, meaning that how the investors is looking at our Malaysia bond market. And also the S&P Malaysia Bond Index total return, which illustrate our bond index performance. So since December 2022, we can see that the foreign investors, they are quite positive in our Malaysia bond market, because ultimately, our Malaysia, if you look at our MGS 10-year yield, if you look at our Bank Negara Malaysia monetary policy, they are relatively stable compared to what we are witnessing out there, developed market. If you look at the US, you look at the Japan, you look at China, they are relatively, I would say that Malaysia is relatively stable and more predictable for the foreign investors. So that's why we are witnessing more inflow coming in, except for April, what happening in the US side, the regional bank failure. So that's why we come up with a conclusion where the investors are still positive in the bond market. So when the investors are positive in the bond market, and they start to put in their money into the bond market, what's gonna happen? They need to purchase MYR. Subsequently, the demand of Malaysia ringgit to increase, and it will strengthen. Sorry. Yep. Yeah. So the next part, I want to bring attention to what happening in our Bank Negara Malaysia policies, to aid Malaysian ringgit strength. In a past 10 years, you can see that our OPR rate compared to the US Fed rate, I would say that is showing a positive correlation, but you can also see a huge difference compared Bank Negara overnight policy rate and compared to the US Fed rate, because ultimately we have the different target. So this time around, we can see that since 2021, when the Fed started their aggressive tightening stance, the Fed rate spiked strongly, and even it exceeded the Bank Negara OPR rate. So some of the people out there, they are arguing that the Bank Negara Malaysia, they could follow the pace of the the US Fed, but we think that it's unlikely, because ultimately, if you look at our domestic economic growth, we are still relatively healthy. And even if you look at our price, our inflationary pressure, our inflation rate is still showing a downtrend, meaning that everything is still under control from the Bank Negara Malaysia perspective. Coming into the second part, which is showing you a Malaysian foreign reserve. You can see that from the gray bar chart, which is showing what happening in GFC 2008 and also 1MDB scandal. If you still recall, during that era, our Malaysia ringgit is showing a huge outflow, resulting in depreciation of a Malaysia ringgit. So during that era, we can see that illustrated by the by the light blue color, light blue color line chart, which is showing a Malaysia gross external reserve, meaning that the Bank of Malaysia they took action during that area to control the ringgit outflow, meaning that they are spending money to purchase back the ringgit. So you can see that during the past two major events there, the Bank Negara Malaysia, they took some action. However, coming to what happened now, right? You can see that although our external reserve is showing an all-time high, while also the USD MOI is trading is near to the all-time high level, but the Bank Negara Malaysia is still had not really active in deploying their cash, meaning that the Bank Negara Malaysia they are taking a more prudent approach, which will think and the Bank Negara Malaysia, they are still having some bullet. If the things goes beyond control, they still manage to spend the money and purchase the ringgit. And subsequently, it could be a bottom line for the ringgit to strengthen further. So yeah, this will be my last chart for the Ringgit Malaysia, where we deep dive into the Malaysia's balance of payment. You can see that throughout the years, our balance of payment is showing a positive trend. And why? Because it's mainly supported by our net export of goods. You know, Malaysia being a major exporters in especially in E&E and also petrochemical. But coming into recently, like what I believe that I already mentioned thousands times that some of the largest trading partners like China, US, EU, they are still having they are still having a corporate recovery. So that's why it negatively impact our net export as well. But coming to the moving onwards, we believe that from the services side, we can see the revival in tourism sector, and it will bring a positive impact to our balance of payment. And also the primary income side, which is representing the more capital market. The primary income deficit has improved, supported by a lower outflow in the DDI and also a portfolio investment income. So combining all the factors that I mentioned just now, we believe that the ringgit is already oversold, and we are expecting the ringgit to strengthen against the US dollar in the probably in the first half of 2024 or even the second half of 2024, where more certainties and more positive catalysts to come in. So this will be my last topic, which I want to tell you, the Madani economy, which the new economic landscape. Maybe you will ask me why we need to understand the Madani economy when I'm just investors and I don't want to, to know too much about the fiscal side. Well, interestingly, if you look at Mahathir area or even Najib's area, they do have this kind of a long-term economic policy where this will be the bottom line for the government to to put in some effort in terms of stimulating economic growth. So if you want to position in the respective sector, you need to understand what's happening in the fiscal side. So from this kind of Mandarin economy, we see a clearer direction of the fiscal policy. Maybe you ask me, will the Mandarin economy be a game changer? We think yes. If you look at the table on the right-hand side, you can see that the first two parts, which is economic growth and also the fiscal sustainability, are the key priorities for the Madani economy. So during our Prime Minister Anwar Ibrahim's speech, he has highlighted a lot of key initiatives. So I don't want to go too deep into it because it's gonna be another 1 hour session. But what I want to highlight here is you can see that the government he has specifically cited this kind of the execution of projects like MRT3, Penang LRT, like BRT, and also Penang and Subang airports. And also apart from this kind of infrastructure project, what he has also mentioned is the incentive, like initiative, and also allotment designed to benefit those MSME, startup, and also the specific sectors. So when I talk about a Malani economy, definitely there are two stuff that you need to understand. First and foremost, the NETR, National Energy Transition Roadmap. Basically, it is a long-winded framework, but short and simple way to illustrate what happening in this NETR is the government has this intention to move from Malaysia, we are traditional fossil-based economy to a sustainable green economy by 2025. So, as of 2020, we can see that our renewable energy only accounted for about 4%, meaning that if the government really, they have the intention want to achieve the target by 2050, with a 70% of our energy is using renewable energy, they are still a long distance from there. here I don't want to argue that is this realizable realizable or not. But what I want to bring out the message is the government have this intention, and we as the investors we can take a look at all these renewable energy, because if the sector want to have a positive growth, the government intention is extremely crucial when it comes to supporting the sector's growth. So next, the NIMP. It short and simple. The key aim for NIMP is to aims to revitalize the Malaysian manufacturing sector. So basically, the government has come up with some framework in a 2030 that you can see that some of the key sectors like electrical and electronic, chemical, EV, aerospace, pharmaceutical, as well as the advanced materials such as minerals and metals. So you know that Malaysia, our manufacturing sector, especially if you look at our technology side, we are quite tilted toward the downstream, which is not really it's a lower margin compared to the upstream players. So the government has this kind of intention to refocus back into this kind of a high growth, high value sector. So actually, the government is not only specifically mentioned about this their intention on this in the NMP. If you closely monitor to what happened in I think last week, the government has also mentioned about the high growth, high value sector, which is in a 12 Malaysia plan midterm review. So basically, we are expecting a positive growth in those sectors that the government mentioned. So if you look at the sectors that might benefit, these are some of the lists that we think investors could take a look at these sectors, because in the next couple of years, we believe that the government will have this intention to support the sectors. Again, I want to encourage and advocate investors to take a more bottom-up approach, either investing in UT or investing in stock, to focus on these sectors, because ultimately, if you look at our KLCI, our domestic, the large cap burst, these sectors are having a relatively smaller weightage in the KLCI. So that's why we encourage investors to take a more bottom-up approach. And also, last but not the least, I will bring attention to the right-hand side, Malaysia's FDI. Actually, you can see that Malaysia foreign direct investment is still showing a positive trend despite so many macro uncertainties. Indicates that, yeah, Malaysia, although if you look at our KLCI, is I would say that it's relatively mild, but compared to our regional peers, Malaysia is still interesting country for investors to look at. So back to our conclusion, if investors would like to take opportunity to accumulate upon the weakness, we think that probably it's a good time for now. Yeah, this will be my last slide. If you want to know more about what's happening in Malaysia, feel free to visit fsm1.com.my for more information. And if you want to if you want to know more about what are our I mean you want to look at our write out, feel free to look at our FSM1 spotlight, where I have come up with this Malaysia outlook and also Malaysia ringgit outlook, where more information is inside. So that's all for my presentation, and I would like to move to the Q&A session now. Okay, well, there are plenty of questions here. So yeah, I will answer the question. So for the first question, will the weaknesses in ringgit will become a point for investors to consider to invest in Malaysia? Definitely from the investors, especially from the foreign investors' perspective, ringgit will be one of their the key factors to consider about. So will the weaknesses in ringgit will become a point for investors? I would say that is yes, because ultimately, if the investors, like one of the slides I mentioned just now, with the declining treasury yield, the investors will try to seek for a better return in the emerging market. And with that, Malaysia, we have a weakness in we have a weak ringgit, and also we are. Although despite we have a positive economic growth, but because in the last few years, because of political instability, investors are not really positive in this market. So coming into now, where we have already witnessed some of the subsided political incident, risks, we are expecting a positive growth in Malaysia. So next question, given the higher interest rate overall and FD rates, what is the incentive to invest in ETF index with 4% dividend yield? Well, this is an interesting question, where I also received a similar question when I met with my client. Basically, you can see that given the higher interest rate, if you look at our Malaysia interest rate, probably can give you about 3.6 to around 4%. Let's say for 1 year deposit rate. So you can see that KLCI, I will just use KLCI as an example. You can see that KLCI is providing you a sustainable dividend yield at about 4% to 5%. What happened if you look at the worldwide bourses? Those worldwide bourses, their dividend yield it just average about I think it's about 3 to 4%. So when it comes to dividend yield, Malaysia is providing a sustainable and also a lucrative dividend yield. So next part, when it comes to capital growth, like what I mentioned just now, if you look at our KLCI, it's still trading at its cheap valuation, meaning that with this kind of positive catalyst to come in, especially when the global demand recovery and some of our internal factors to turn to be better, turn to be optimistic, it's gonna form a tailwinds to Malaysia KLCI, and subsequently it will provide you a potential capital gain. So that's why we think that in terms of fixed deposit, yeah, although generally you are taking a risk-free rate when you invest in fixed deposit, but if the investors can take a higher risk, we will encourage investors to take a look at the Malaysia capital market. So next part, is there any commentary on the employment and wage growth? Well, I believe that you are referring to the Malaysian market, right? So when it comes to Malaysia unemployment rate, you can see that our unemployment rate, I would say it's very, very stable. It usually will hover about 3.6%. And unfortunately, the wage growth, because if you look at Malaysia, we are trapped in the middle income trap for, I would say, for years, especially after the 90s. After the 90s, we are experiencing a strong economic growth, and subsequently, we are facing this kind of middle income trap. So if you ask me what can Malaysia do in order for us to change from the middle income to more high income nation, I think that the government is doing the right thing, where they need to focus on the economic growth, and also they need to focus and strike a balance between economic growth and also the social welfare. So nowadays, if you look at some of the key initiatives like the Anwar Ibrahim has mentioned, based on the NIMP. If you look at the manufacturing sector, manufacturing sector, we got a lot of employees out there. So what is the average salary for them? Interestingly, it's only about 1 to 2K. So the government has the intention to focus on the manufacturing sector growth, and they are targeting about 4.5K for the average the average wage for the employee. So with the higher income, it will turn the Malaysia economic to a better growth, I would say. So that's why currently, yeah, we still awaiting for more certainties. I mean, in terms of short term, we are still awaiting more certainties to come out during a budget. But in the mid to long term, we already witnessed the government has a strong intention to focus on the manufacturing sector. So that's why when it comes to employment and wage growth, I would say that for employment, I would think that employment is likely to stagnate. But for wage growth, the direction is correct, but execution is the crucial part. So we are hoping for more. The government will have this kind of a positive execution phase for the next couple of years. So next, for the core income fund. So the first question, does the fund invest in big cap stocks or only mid and small cap? For this question, generally the fund manager, we have spoken with fund manager for some meetings out there. The fund manager, he's taking a bottom up approach. So the investment strategy is not really constrained to either only invest in big cap or also mid and small cap. But if you look at the fact sheet, you can see that the fund manager, at least the current investment strategy, is slightly tilts toward the mid and the small cap. So the second one, what is the breakdown of mid cap, small cap, and big cap? How many percent? And also last, can the fund invest all in small cap? Unfortunately, I might not be the best candidate to answer this. I will encourage I encourage this audience to send us email so we can transfer the queries to the fund manager. So for the next question, if commentary of Fed rate hike in dollar index is true, shouldn't the upside to emerging market stocks already been realized? This is especially supported by the net inflow of foreign and local institution investors in the first few slides. It's a very interesting question. So basically, you can see, please give me a couple of seconds here. So you can see that this is what happened in the past 3 cycle. But interestingly, you can see from this chart, right, it's still trading at a relatively high level this time. So this is taking an assumption that, let's say, 5.5% is the last rate hike announcement. Treasury yield is still trading at a high side, because ultimately, what's the difference between the rate hike cycle for this time compared to the past 3 times is the investors, they are still quite uncertain to the Fed, to the Fed monetary policy moving onwards. Yeah, although a lot of people, they're arguing that we are already near to the terminal rate, but there are no people that dare to say that this is the peak for the Fed rate. So that's why the treasury yield is still trading at high level, and that's why you look at the emerging market. I would say that, yeah, do have a mild rebound, but compared to our past glory, we still have a far direction. We still far away from there. So that's why we think that yeah, although we do witness some of the net inflow in foreign and local institution investors, but if you, of course, chart I only show you about 1 year. If you look at our past glory about from 2010 to about 2019, you can see that our net inflow from foreign investors, we are still far away from our past glory, I would say. So that's why we do see some opportunity in this Malaysia burst. So next, when is expected the ringgit appreciation against USD? Definitely, I do not have a crystal ball to answer this, but based on our analysis here, we are expecting once those positive catalysts to starting to factor in. Likely to be likely to be first half of 2024, or even the second half of 2024. We are expecting the ringgit to strengthen against the US dollar. So for the next question, as for the CAF income fund, it is written in the product highlight and prospectus that this fund will focus on the high dividend stocks. Are there high dividend mid and small caps? And next, why is a CAF tactical fund not recommended? What is the difference in income and also a tactical fund? Well, this is also another question that a lot of people might ask about. So basically, a CAF core income fund. Okay, so first and foremost, there are two different fund managers that are managing fund, the CAF core income fund and also the CAF tactical fund. So if you want to seek for a more diversified approach, we think that a CAF tactical fund is a better way for you. It's a better option for you. While if you want to seek for a more bottom up, if you want to look for more like a concentrated portfolio, we are suggesting you to take a look at a CAF core income fund. So definitely both funds are great because they are both fund managers, they are working in the same investment team. They do share their idea. So that's why I would say that when it comes to investment strategy, like what I mentioned just now, one is more concentrated and another one is more diversified. But when it comes to performance, you can see that both tactical and also the core income fund are delivering a great performance. So if you want to invest in Malaysia, probably these two funds will be a good option for you. It's just a matter of which kind of investment strategy you will prefer. So for the next question, any comparison of Malaysia's macro environment and stock market performance and its peer in ASEAN? Well, if you look at Malaysia, I will just use ASEAN for Thailand, Singapore, and also Indonesia as comparison. If you look at Malaysia, you can see that our Malaysia KLCI is more tilted toward the traditional value sector, just like in Indonesia. Some like Indonesia big boys, like Bank Mandiri, Bank Central, there are a lot of financial players as well. But Indonesia is starting I would say they are emphasizing more on the tech space, and you can see that one of the largest players, Gojek Tokopedia, as known as GoTo, is already being the largest weightage in GCI index. So that's why Malaysia, when it comes to the technology innovation phase, I would say that we are still being a laggard compared to the ASEAN peer. On the other hand, if you look at Singapore, the SGN index, the SGN index is even more traditional value sector. But if you those three big banks like OCBC, UOB, and also the DBS, they are more stable counters, I would say. So that's why if you want to seek for stable counters, then SGX might be a good option for you. But if you want to bet on more community plays while seeking for relatively stable counters, I would say that Malaysia, KLCI will be a better option. So for the next question, Malaysia macro environment. you're gonna find it interestingly because in within these 2 years, in 2023 and also the 2024, Malaysia, we had a six-state election in 2023. Thailand, they also have their election this year. I mean like a few months ago. Indonesia, they are having also Indonesia and Singapore, they do have their political events in next year as well. So that's why we can see that the ASEAN market, although they being a bright spot last year, but coming to this year, because investors, they dislike uncertainties, right? So that's why you can see that Malaysia and also Thailand, we have been witnessing some of the selling pressure when we are having the political instability. But after the political instability has subsided, we do see a rebound in Malaysia and also Thailand market. So coming back into Indonesia and Singapore market, we are expecting a similar trend as well. When it comes to the election phase, probably there will be a selling pressure in these two markets. So if investors do want to take a more tactical approach, definitely the political factor is one of the key area that you should note on. So for the next question, what are some of the counters that involve in hydrogen, green mobility, and CCUS? Probably I'm not the best candidate to answer this question when it comes to stock pick. So I'm sorry for that. I'm gonna skip this question. So next, what's the impact of our debts and its interest servicing to the Malaysia economy and market? Well, if you look at our Malaysia market, right? You look at our Malaysia debt. Currently, our Malaysia debt, if not mistaken, is about 69% to GDP. So I would argue it's a relatively stable level. Because if you look at Japan is trading up. Japan debt to GDP ratio is about 260. If you look at even like Singapore, if you look at like US, they are having a very, very high debt to GDP ratio. But coming back to Malaysia, if you ask me, will the weakening, I mean the current trend, the weakening ringgit will be will be will weigh on our Malaysia debt interest payment? I would say that is no, because if you look at the Malaysia debt component, you can see that our debt, I mean our most of our Malaysia debt is servicing in ringgit Malaysia. So that's why we can ignore the currency movement for a big part of the debt. So that's why I will argue that from the debt to GDP ratio, Malaysia is still relatively stable, and at least for this juncture, it is not a thing that we should worry about. So next, what is your view on the potential reinstatement of GST, and how will removal of subsidies, including like petrol, electricity, to impact the private consumption pattern, which will affect the GDP growth ultimately? It's also one of the interesting questions. So first and foremost, if you ask me, will the government implement GST? I would say that yes, potential will be. Next, will the government remove the subsidies, or even I would use the word reform of the subsidies? I would say that yes as well. So during the Money and Economy speech, NIMP, NHTR, or even the 12th Malaysia midterm review, the government has not cited. I mean, they did not give out very clear direction. How will the government to narrow the fiscal deficit? But you need to know one thing, that the government has already had this kind of strong intention. They want to narrow down the fiscal deficit. So they need to find some revenue from that. So either the potential reinstatement of GST or potential reformation of subsidies. So coming to the budget 2024, which I'm expecting to be held in October, we are expecting the government, they will start from the removal of subsidies first, probably in a gradual manner, because ultimately they want to strike a balance between like economic growth, and also they don't want to, create a lot of public grievance there. So social welfare is another key factor for the government to take consideration. Coming back to our conclusion, we are expecting that the government, they will focus on subsidies reformation in the budget 2023, I mean the 2024. And let's say if the situation turns to be better, when the global, when the economy becomes stronger, then the government will only start to implement the GST. So yeah, that's for my question. So next part, okay, so from this question is it includes some opinion. So basically, the audience is starting to losing interest in KLCI, and because of KLCI is weak and not fully transparent enough. while FSN has promoted many foreign opportunities, why we still need to come back to KLCI? Well, I would say that from the diversification perspective, definitely Malaysia is one of the I would say that it's one of a very interesting market for investors to take about. Definitely, I'm not asking investors to all into Malaysia market. But when it comes to diversification, because in FSM1, we always encourage investors to take a diversified approach, meaning that you should form your core allocation. For those countries like most major development market like US, or even if you think that China is a growth market, then you can use China as a core market. While also Malaysia, we think that given this kind of all these factors that I mentioned just now, the positive catalyst, when this kind of positive catalyst starting to materialize, it could form a tailwind for Malaysia. So if you want to take Malaysia, if you are positive on Malaysia while you don't want to take too much risk on Malaysia, probably I would recommend you to take a more tactical approach, meaning that let's say you like US so much, you can form about a big portion of your allocation in US while also taking a slightly smaller allocation to the Malaysia. So in order to first and foremost diversify your risk, so that's why that's how your investment wouldn't go go all bust when something's wrong. So diversification is definitely one of the key factors, and we think that Malaysia definitely is one of the best option for you to consider. So next, with the first digital banks kick off its operation recently, how would the digital economy fare in the economy? Would the banking stocks in KLSC going to see a boost or otherwise? This is also another interesting question where the Grab Bank, GX Bank, they are the first bank who launched the digital bank, and moving onward, we are going to witness more digital bank, the four other competitors to come in. And yep, so if you ask me in the first 3 years, how is gonna impact our banking space, I would say that the impact is likely to be minimal. So first and foremost, if you look at the asset base for these digital banks based on our Bank the Ground Malaysia framework, is the asset is limited at about 3 billion. So it's still far away from those big boys in bank space. Their asset, their loan book is much more higher compared to the 3 billion. So if you look at the framework also from the Bank the Ground Malaysia, one of the key criteria, one of the key criteria for these digital banks is to serve the unbanked or underserved population. So at least we are expecting for the first 3 years, when the digital banks, they will focus on this kind of population. And also don't forget that for digital banks perspective, they need to build their infrastructure, meaning that they need to they need to attract customer, and also they need to build their how the UI UX will be, how's the reformation of the apps, and so on and so forth. So that's why it requires a lot of capex from the digital banks to the development. So that's why I would say that in the short term, we are expecting minimal impact to the bank space, but in the mid to the long term, it's gonna be very interesting for us to witness how the digital bank going to going to influence the evolution of the banking space. But when it comes to evolution, right, for the banking space, like it or not, it's gonna encourage the digitalization moving onwards, meaning that from the big boys perspective, they gonna focus more on the digital bank, digitalization. Like let's say for Maybank, they are focusing on their MAE, for CIMB, like CIMB Click, so on and so forth. So yeah, moving onwards, we are expecting more digitalization, either from bank space or even the digital bank. So yep, that's all for this question. And here we go for the last question. Crude oil has already shot above 90 US dollar per barrel. How will this affect ASEAN countries and also the markets, KLCI and other ASEAN markets? I would say that at least in the short term. So okay, I'll back to the commodity prices first. So let's say the crude oil is now trading at US dollar 90 per barrel. Currently, we are expecting the crude oil to trade hover around this area, about 80 to about $95 ringgit, $90 per barrel. So with that, KLCI being one of the largest exporter, if you look at our big boys in Malaysia, although it's not inside KLCI, Petronas, and also some of the big boys like Yinsen, even PCAM, these are categorized under the Busan Energy Index. So with the elevated crude oil prices, it's gonna bring opportunities to our oil and gas counter. While on the other hand, how would it affect the ASEAN countries? I mean, you mean the other four. So with this kind of elevated crude oil prices, it could bring a negative impact to their inflation, and subsequently, you can see from Thailand and also the Indonesia, you can see that both countries, their central banks, they're very focusing on controlling their price pressure. So if the crude oil being elevated, it could negatively impact their central banks to take a more tightening approach. So if the central banks took a tightening approach, it might negatively impact their capital market as well. So I would say that if the crude oil remain to be elevated at current level, it would be beneficiary for Malaysia, but it's not for Thailand, Indonesia, and also Singapore. So I mean, just a little bit of extra information from Malaysia and Bursa Energy Index. We are not really positive correlated compared to the crude oil prices. That's why you can see that although the crude oil prices at one point of time is saw at about above 100 US dollar per barrel, but our Bursa Energy Index is still remain lackluster because ultimately our Bursa Energy Index, they are mostly service provider. So what we favor about the energy the crude oil prices is we need a high and stable price instead of a one-off spike in the crude oil prices. So that's why with this kind of anticipation of crude oil price could remain at about this level, it could bring positive impact to our oil and gas player. So I think that's all for the question. And is there any question left? So yeah, with this, it will become to an end for my presentation. And thank you for watching and stay invested. Hope to see you guys next time. Thank you and goodbye.